Just a disclaimer, I'm not a SEBI registered financial advisor or an analyst or a research analyst. This is an endeavor only for educational purposes. Trading is incredibly risky, so please consider the risks before investing in the markets, trading in futures and options. With that out of the way, let's get on with the video. Do ICT concepts work in India? Yes, they do work on the Indian markets, in my opinion, because at the end of the day, all financial markets follow the same mechanism where markets move from internal range liquidity to external range liquidity, back into internal range liquidity, and so on and so forth. For those of you who are absolutely unfamiliar with ICT concepts, you need to learn what these things are. Just one search on YouTube or Google, you'll find what a fair value gap is, what an order block is, what these things are, and you'll be able to articulate ICT concepts better than most people. You need to understand one thing. What is liquidity? Liquidity is what the market is seeking. It's either internal range liquidity, which is a fair value gap or a volume imbalance or a liquidity void. Don't worry about these terms. I'll explain. These are basically just gaps, different forms of gaps. Internal range liquidity is either a gap, and external range liquidity is an old high or an old low. That's about it. That's it. Instead of calling it liquidity, you could call it an imbalance and old highs and lows. That's it. This is how support and resistance is determined. Price action is always a sequence between internal range liquidity to external range liquidity, back to internal range liquidity. Sometimes it doesn't move in a straight line, but generally it follows this principle. It goes from internal to external, external back to internal, so on and so forth. In practice, it should look something like this, where it's higher highs and higher lows. It's forming some kind of trend. See, above this high is buy stops, which is external range liquidity. Same for here and here, whatever there will be. It doesn't matter. But inside, there will generally be some kind of an imbalance on some time frame, which will be a fair value gap. Since this is an uptrend, it will look like a buy side imbalance, sell side inefficiency, or a BISI, which is basically a bullish fair value gap. So this is going from internal range liquidity to external range liquidity, internal range liquidity, external range liquidity. This is how a bullish trend forms. Similarly, a bearish trend forms where external range liquidity is taken in the form of sell stops below old lows, which is external range liquidity, and the internal range liquidity is just a fair value gap, sell side imbalance, buy side inefficiency, or a bearish fair value gap. These are bullish fair value gaps. So you get the idea. This is the entire crux of ICT concepts. If you understand this, you know most of what ICT has been teaching. Now, how do we apply this to the chart? Do they work on the Indian markets? Let's see. It doesn't matter what market you look at. There's always going to be sell stops below old lows and buy stops above old highs. And there will always be fair value gaps. Fair value gaps are basically a three candle formation where the outer two candles are not touching. So this is a bearish fair value gap that got inverted over here with this green candle closing above it, with bullish fair value gaps overlapping it. This is also called a balanced price range. When a bullish fair value gap overlaps a bearish fair value gap, this is called a balanced price range. When price goes above, closes above this down close candle, this black candle, this becomes a change in state of delivery and it forms a bullish order block. This is all ICT concepts. And this is exactly how the price has been moving on the Nifty for several years now. This is from 2024 when there was an election. See, this is an intermediate term low that formed inside of this buy side imbalance, sell side inefficiency, this fair value gap. It closed below this fair value gap and this low. If you've watched the 2022 mentorship, this is called a shift in structure. And this is your fair value gap entry short. So up to here, price was in an uptrend. It was moving higher. It was going from internal range liquidity, buy side imbalance, to external range liquidity, buy stops. Now it's shifted structure and it's seeking internal range liquidity in sell side imbalances and external range liquidity below old lows. So that's what happened here. This is called a market maker sell model overall, but you don't need to worry too much about that unless you're too keen on trading very precisely. We'll get to market maker models later. At the moment, let's focus on what's going on over here. See, up to here, price is coming back into bullish fair value gaps and going higher. See, there's a fair value gap here as well, a fair value gap here, but it kept going higher. Over here, it started going into bearish fair value gaps, this one, and started falling below old lows. And it kept going back and then falling again. See, this is also a fair value gap. You get the idea. Then again, over here somewhere, it finally shifted structure after taking out these sell stops here. Wait, did it take it out? Or maybe it didn't. Maybe it'll take out these lows later. It took out this low, that's for sure. What is below an old low? Sell stops. What happened here? This fair value gap got inverted. And this is a shift in structure again. This is a mitigation block, by the way. How can we tell? Well, actually, it could be considered a breaker. Low, high. This is a higher low and a higher high. You can consider this a mitigation block, but you can also consider it a breaker because this low got taken out. Low, high, lower low, higher high. So it depends on how you see it. I'll just categorize it as a breaker for this sake of simplicity. So this breaker acted as support and price went higher. This is a fair value gap. Basically, on the daily chart, you can clearly see that ICT concepts are being respected because that's simply how the markets work. It's not because ICT is some kind of central banker market maker who's actually written the algorithm for all the markets. It's just that he discovered how the markets actually book. Now, how do you trade this? I have made a video about how to trade the Indian markets using ICT concepts. If you want to refine your understanding, please subscribe to the channel. I'll be able to explain this over time. I'll make more videos about how to trade the Indian markets. But I will strongly suggest that you stay away from, scalping on the Indian markets because the liquidity is not that great and the price action is not reliable enough on a regular basis. Anyway, I hope you learned something from this video. I hope I've actually convinced a lot of you that ICT concepts do work in India and the Indian markets because this is clearly following ICT's methodology. This is a bearish fair value gap. You get the idea. I hope you learned something from this video. Until next time, good luck and good trading. Ciao.